one thing I think feels more certain coming out of this spring budget. If you asked me this question about a week ago, I would have said, well, this is it. This is the chancellor's last chance going into a election year. But it does feel like we could maybe, just maybe, get another fiscal event. So there may be another chance for the chancellor, for the prime minister to come out and set out a different economic outlook, perhaps just after the summer months. Now, maybe it would be in early September. We won't call it a mini budget, but certainly a small mini fiscal statement after the summer recess certainly looks a lot more likely than it did a couple of weeks ago, just given the scale, given the reception that we've seen of this spring budget. So the odds, I think, that we have another fiscal event this year, certainly on the rise. I think that's what the markets are sort of expecting as we came out of that spring budget. And that may end up being the base case if indeed we do have an autumn general election.
Okay, so maybe some more surprises coming. Sanjay, let's unpack what this is going to mean for the economy, because it's very clear that the macro backdrop has changed since the autumn statement here. How are you assessing the translation into the economy as it stands on paper? And ultimately, what is this going to mean for the BOE and Andrew Bailey?
Yeah, so from a growth perspective, it's a good question, Dan. There's not a lot here. So we have the NICS cut. That was the most expensive policy measure announced. A second round of NICS cut, I should say, worth about £10.5 billion. Some other raft of tax cuts as well, capital gains tax. Again, we have to offset that against the tax hikes that we saw yesterday. So if you put it all together, we're talking about something like 10, maybe 20 basis points additional to growth this year. And that number, I think, tapers out as we go through the forecast horizon. So we're talking about marginal sums in terms of what it means for growth. When it comes to the Bank of England, I think there are some good things here for the BOE when it comes to near-term inflation. Look at the fuel duty extension. That was something that the Bank of England did not anticipate. The rest of the market did. It was very clear that this chancellor was not going to extend or hike fuel duty in an election year, but certainly the Bank of England takes policy as given, and policy as of before yesterday was to increase fuel duty. Now that that's been announced, that will knock off something like 20 basis points from headline inflation come April. The freeze on alcohol duty, another good story, not just for consumers, not just for leisure, not just for business, not just for restaurants and pubs, but certainly from an inflation perspective, another good point, good element to add into the BOE. So is this going to move the dial for the Bank of England? Is this going to move the dial for the Monetary Policy Committee? Not really. Again, this was a modest sum of cash. There's enough spare capacity in the economy as per the Bank of England's projections in the February MPR. The real question, I think, for the bank, for Andrew Bailey, for his committee, is whether we're seeing that evidence that they need to see on wages and on inflation, near-term services inflation, to give them that confidence to tweak bank rate lower over the course of the year. This budget is not going to move the dial for the Bank of England.